So what's going on? Why is one of the strongest companies in the world trading sideways? And what might happen to Nvidia stock next week as the GTC conference approaches? The strange situation Nvidia is in. In Nvidia's fiscal Q4 2026, the company delivered what many analysts called a perfect quarter. Revenue reached $68.1 billion, while data center revenue alone hit $62.3 billion, showing explosive demand for AI infrastructure. Despite these numbers, Nvidia stock has been mostly flat for 2 months and is actually down about 5% year to date. Meanwhile, analysts continue raising their price targets, with Morgan Stanley at $260, UBS at $245, and Tigris Financial projecting as high as $360. What the market is really worried about. According to Morgan Stanley, the market already accepts that Nvidia is incredibly strong today. The real debate among investors is whether the AI spending boom will last for many more years. Interestingly, Nvidia's earnings expectations have been revised upward by 38% in the past 6 months, so the stock isn't being held back by weak fundamentals, but by uncertainty about the long-term sustainability of the AI cycle. The next big catalyst, GTC. The next major event for Nvidia is the GTC conference, taking place from March 16th to March 19th in San Jose. CEO Jensen Huang will deliver the keynote presentation on March 16th. And historically, this event has been one of the biggest catalysts for AI and semiconductor stocks. This year, Nvidia is expected to unveil its next-generation Rubin architecture, which could use HBM4 memory and deliver another major leap in performance. Investors will also be watching for hints about Nvidia's long-term roadmap, possibly including the Feynman architecture planned for 2028. But there are real risks. Despite the bullish outlook, several risks remain. Rising geopolitical tensions have pushed oil prices higher, with Brent crude now above $85 per barrel, and higher energy prices can reduce risk appetite for technology stocks. At the same time, competition is increasing. Companies like AMD are improving their AI chips, while hyperscalers such as Amazon, Google, and Meta are developing their own AI hardware to reduce reliance on Nvidia. 3 scenarios for next week. The first and most likely scenario is a dip followed by a rebound. Nvidia could start the week under pressure due to macro concerns and test support around $175 to $178. But as the GTC conference approaches, investor optimism could push the stock back toward $185 to $195. The second scenario is a breakout above $200, especially if positive news leaks ahead of the conference. Strong expectations around Rubin or large customer orders could trigger short covering and accelerate the rally. The third scenario is continued weakness. If geopolitical tensions escalate and oil rises toward $90, Nvidia could temporarily fall toward $170 or even $165, although that type of drop might create a stronger buying opportunity before GTC. The most important support levels are $175 and $168, while the key resistance levels are $185, $192, and $200. If Nvidia breaks above $200, options positioning could trigger a rapid move higher. Final thoughts. So the most likely outcome next week may be short-term volatility, followed by stabilization, with Nvidia potentially trading in the $185 to $195 range as investors position themselves ahead of GTC. But the bigger question investors must answer is whether the AI investment cycle is still in its early stages. If the answer is yes, short-term volatility may not matter much, because the long-term demand for AI infrastructure could remain enormous.